Welcome to the Northbound Wealth Podcast. All opinions expressed by Brent, his co-host, or his guests are solely his own opinions and do not reflect the opinions of Northbound Wealth Management LLC. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, or tax advice, or as a solicitation to offer or to buy any securities. Clients of Northbound Wealth Management LLC may maintain positions in the securities discussed in this podcast.
Hello, everybody. Today is August 17, 2026. Welcome to the Northbound Wealth Podcast with your host, Brent Foster. The S&P 500 index rose 0.4% this past week after cooling inflation and unexpected drop in retail sales boosted the odds for the sixth straight monetary policy pause in September. The market benchmark ended the week at 7,785.76. The index is now up 3.8% quarter to date and around 14% this year. The NASDAQ Composite Index edged up 0.14% last week and is up around 15% for the year after closing around 26,729.16. The Dow Jones Industrial Average slid 0.56%. The MSCI EFA Index, which tracks developed overseas stock markets, advanced 0.26%. This is the third straight week for the S&P 500. On a positive note, the probability of the Federal Reserve extending its policy pause next month jumped after July's consumer and wholesale price inflation rates, both headline and core, declined, and retail sales for the month unexpectedly slumped the most since May of 2025. There's now a 67% chance that the Fed will leave interest rates unchanged, up from 56% a week ago, according to the CME FedWatch tool. Treasury Secretary Scott Bessent said on CNN that the U.S. plans to announce measures on Iran next week that have never been seen before, he said, in quote. Defense Secretary Pete Hegseth said the U.S. can sustain its blockade against Iran indefinitely, Al Jazeera reported. The energy sector in the S&P 500 had the largest percentage gain of the week, up 7.3%, followed by a 1.5% advance in utilities and a 1% increase for both consumer staples and healthcare. Financials, industrials, real estate, and tech also rose week to week. Phillips 66 is expected to accelerate share repurchases in the second half this year, supported by ongoing balance sheet deleveraging, UBS said in a note. Separately, Phillips 66, Kinder Morgan, and H.F. Sinclair said they have reached a final investment decision to move forward with a joint venture to build the $5 billion Western Gateway Pipeline System. Shares of Phillips 66 surged 15% this past week. Three S&P 500 sectors that declined last week were consumer discretionary, consumer communication services and materials down 2%, 1%, and 0.9% respectively. Tapestry shares tumbled 21% after the company set out a fiscal 2027 revenue outlook below the midpoint of Wall Street's forecasted range, taking the shine off stronger than expected fiscal fourth quarter adjusted earnings and revenue. AppLovin's 30% long-term annual revenue growth target lacks sufficient evidence, with uncertainty rising around the sustainability of its self-learning growth, BofA Securities said in a report. BofA downgraded its rating on AppLovin stock to neutral from buy and lowered its price target to $400 from $430. Shares of AppLovin slumped 9% last week. All right, wide charts, weekly market insights, major index return summary. Year to date, MSCI EFA index is up about 14.98%. S&P's around 14.72. NASDAQ composite 15.72. Dow's up about 13.05%. 10-year Treasury rate 4.68. That's ticked up quite a bit from 4.29% a year ago. So that's up about 9%. So yields are going up. And the 2-year Treasury is what we're taking a look at too. It's trading around 4.2%. And so I'm watching the 10-year note. If it gets to 5% or above, that could possibly be concerning for stocks, but maybe not. All right, inflation cools, spending slows. Wednesday's consumer price index report last week showed consumer prices rose 0.1% in July over the prior month and 3.4% over the prior 12 months. Both figures came in as expected, which was welcome news for investors. Thursday's producer price index, or PPI, showed the pace of wholesale inflation also slowed more than expected, but the inflation update was somewhat countered by news that consumers spent less in July. Economists expected a 0.1% increase in July retail sales over the prior month, but they actually fell 0.6% month over month. So the consumer didn't spend as much last month, and we'll be tracking that for you. Charts of the week: US stocks versus foreign stocks, 10-year performance comparison. I put this out on the blog, so if you want to check out the chart and go through the data, you can. The S&P 500 index has outperformed the MSCI All Country World Index by about 91% over the past decade. US mega cap technology dominance is the major factor, driven primarily by the strong relative performance of US large cap technology stocks. US mega cap tech stocks like Microsoft, Apple, Amazon, Meta, and Nvidia make up about 14.8% of the All Country World Index, while international holdings, including Tencent, ASML, SAP, and Nestle, that massive concentration of high-performing U.S. names pulled the S&P 500 far ahead of international stocks. When the Magnificent Seven are excluded, the performance of the broader S&P 500 looks much different. The 493 companies outside the Magnificent Seven have seen their earnings stagnate over the past 3 years compared to the 9% earnings growth witnessed by international companies in that time, as measured by the MSCI All Country World Index ex-US. In other words, a very small number of US names drove the lion's share of the index's return advantage. Now, that's been going on for quite some time. A significant portion of US equity outperformance can be attributed to the dollar's rally against virtually every major currency over the past 15 years. When international returns are translated back into USD, currency headwinds drag down the reported performance of non-US holdings, a structural disadvantage for global indices like the All Country World Index. The S&P 500's net profit margin and return on equity are near record highs, and the index is trading at an elevated forward price to earnings ratio of 23 times, well above its 20-year average of 16 times. Expanding multiples over the decade provided a meaningful tailwind to U.S. equity prices beyond just earnings growth. Choosing the All Country World Index over a U.S.-only fund or index means accepting that when American equities outperform globally, you will lag. Over the past decade, that trade has cost investors roughly 18 percentage points compared to the S&P 500, okay, or just investing in U.S. stocks. The All Country World Index US tilted structure and concentration in mega cap technology reduce its value as a diversification tool during periods of US equity dominance. So you got to know what you own basically at the end of the day. So the chart out there shows over the last decade the return of the S&P 500 total return. If you go out to the blog and check it out, 322.1% compared to 230.5% of the iShares MSCI All Country World Index ETF. And you'll see that out there. All right. The second chart of the week is the semiconductor stocks continue their epic run. That's the headline for that. Despite the recent pullback from July to early August over the past 12 months, as you can see from the chart, semiconductor stocks have outperformed the S&P 500 by about 100% and the NASDAQ composite by about nearly 97%. The semiconductor rally is being fueled by a combination of surging AI-driven chip demand, massive capital commitments from both tech giants and governments, strong earnings, and pricing power signals from industry leaders like TSMC, Micron, and others. The market is pricing in a sustained multi-year build-out of AI infrastructure, and semis or semiconductors are at the center of it. All right. So, as a comparison, over the past 12 months, the Philly Semiconductor Index level change is at 120.4%, compared to the US's S&P 500 at 20.25, and NASDAQ Composite at 23.26. This week, key economic data. Monday, we've got the NAHB Housing Market Index. Tuesday, housing starts, import prices, industrial production capacity utilization, pending home sales. Wednesday, Fed meeting minutes from July are published. Thursday, weekly jobless claims, leading indicators. Friday, purchasing managers index, manufacturing, PMI services. Notable companies reporting earnings this week. Tuesday, we've got Home Depot and Keysight Technologies. Wednesday, analog devices, the TJX companies, Lowe's and Target. Thursday, Walmart, John Deere, and Ross Stores. A big one with NVIDIA is coming up in the next 2 weeks. So pay attention to that one. That'll be a big one for the semiconductor space. All right. From a health tip of the week, which I don't always go over, but let's do it. Blueberries, small but mighty. I have a lot of clients from Indiana that go up to Michigan and pick blueberries. It's pretty cool to hear their stories and taste those awesome berries that are massive and delicious. Don't let their size fool you. Blueberries pack a serious nutritional punch. Among the most antioxidant rich foods you can eat. They're as good for your body as they are delicious. Stir them into yogurt, cottage cheese for a quick, satisfying snack. Muddle them into a glass of sparkling water, or maybe bourbon, who knows, for a naturally sweet drink. Or fold them into homemade muffins and pancakes for a colorful, nutritious upgrade. Keep a bag in the freezer so you always have them on hand. This tip was adapted from Healthline. Stay tuned for the next segment. Hey everybody, in this segment, we've got the market index price performance expectations for 2027 and 2028. If you do a quick search out there, it's pretty easy to find. But the price prediction for the S&P 500, which as of August 17th closed at 7,745, that's where it's trading as of close today. The S&P 500 is expected, based on predictions out there in the AI sphere, if you do a search, to be in the range of 8,000 to 10,000 by the end of 2028. So if you look out to 2027, there's folks talking about 9,000 S&P, 10,000 S&P by 2028. And from where that trades as of close today, that is a 22.55% upside. And if you divide that by 2 to get what would that annualized rate be over the next couple of years? That's average around 11,000 or 11.27% per year on the S&P from this price level. That's pretty good. NASDAQ Composite Index price predictions would be 37,000 to 44,000. 2027 to 2028. And that represents a 39.44% upside to where it's trading today, which is 26,644. Okay, so the 39.44% divided by 2 gives you 19.72% per year. And that's pretty good also. The Dow Jones Industrial Average price predictions 55,000 to 70,000, 2027 to 2028. Trading level as of close today was 53,459, which represents a 23.63% upside over the next couple of years. And you just divide that by 2, you get 11.81% per year. So you're getting about a 10, 11, or 12% annualized rate of return over the next couple of years for the S&P 500 and the Dow, and the NASDAQ is closer to 20, which for the S&P and the Dow, that's a little higher than what the historical average has been. This is all powered by our tech revolution that's happening, AI infrastructure, data center build-outs, hyperscalers spending money, that type of thing. The NASDAQ, nearly a 20% return. That's kind of in line with where everything is expected. So do not be shocked or surprised if we get, by the end of 2028 or sometime between now and then, a 10,000 print on the S&P, a 44,000 print on the NASDAQ, or a 70,000 print on the Dow. Very interesting stuff that's out there in the markets right now, and people are bullish, and we're in a bullish pattern A lot of support there. So wanted to pass that information along if you guys haven't seen it. But the future looks pretty bright, powered by a lot of the technology spend and the return on equity that's going to happen over that time, and also with a lot of S&P 500 companies, a lot of companies in the United States adopting artificial intelligence and a lot of tools and agents and things like that to become more productive and more efficient. All right, that's my less than 4-minute food for thought. If only Doc Brown had a financial version of that DeLorean. The truth is, every investor would love to have a crystal ball, but the future has a way of surprising even the best and brightest. To help you prepare for the second half of 2026, here are a few famous TV and movie quotes that capture what investors may be navigating in the months ahead. Space, the final frontier. Star Trek may have coined the phrase, but Elon Musk just ran with it. Following SpaceX's historic June IPO, the second half of the year will be all about watching how the newly public giant navigates Wall Street scrutiny while continuing to build out its space and AI infrastructure. I'm sorry, Dave. I'm afraid I can't do that. That was HAL's 9000's famous line from 2001, A Space Odyssey. In the second half, Wall Street will find out what Anthropic and OpenAI have prepared for shareholders. Both filed confidential paperwork with the SEC in June, setting the stage for market debuts this fall. What have you done for me lately? The Standard & Poor's S&P 500 rose more than 14% in the second quarter. Despite the powerful quarter, investors appear fearful during this summer. Wasn't it Warren Buffett who said, "Be fearful when others are greedy and greedy when others are fearful"? The fear gauge is at 33, which is above neutral, but not to extreme fear just yet, as a CNN poll July 1st, 2026 indicated. In my experience, there's no such thing as luck. So said Obi-Wan Kenobi to Han Solo. Is luck going to be on your side or not? Luck, like hope, is not a strategy. In the second half of this year, which has already begun, you might be heading into an asteroid field of mixed messages on inflation, jobs, and interest rates. What role is luck playing in your strategy? Han Solo famously doesn't want to hear the odds, but your strategy should take in as much solid information as possible. So, at times, the news may feel like it's back to the future in the second half. You may see headlines and think, I haven't seen this movie before. So don't get fooled by short-term noise. Be patient, stay focused, and remember, any companies mentioned are for illustrative purposes only. It should not be considered a solicitation for the purchase or sale of any securities, and investments should be consistent with your objectives, time frame, and risk tolerance. In other news, in the simplest of terms, stock prices are driven by two forces: earnings and the price that investors are willing to pay for those earnings. And this year, estimates for the E in PE ratio are trending up. As you can see in the chart that I'll have out on my blog, the 2026 and 2027 estimates for the Standard & Poor's 500 are higher than they've ever been following second quarter earnings revisions. Stepping up, earnings per share for S&P 500 companies, actual and estimated, are out there on the blog. Estimates pushed higher in the second quarter. Will Q3 results push estimates higher still? We'll see about that as we progress. Why the change? Mostly it's due to a rosy economic outlook. Gross domestic product increased by 1.5% in the second quarter, and the Atlanta Fed's GDP Now estimate for the third quarter was more than 5% on August 6th. So despite the mixed signals from the Fed on short-term interest rates and inflation, S&P 500 companies are having a banner year, and that trend is expected to continue into 2027. But before you start popping out the champagne, remember September and October are just around the corner. Those 2 months can be volatile. So while optimism is in the air, it may come face to face with some short-term price swings. So stay focused and committed to your strategy. And if the markets get bumpy, take a moment and ask yourself, is there any news associated with the short-term price swings that would change the long-term outlook that companies are talking about? And sticking with the strategy is awfully important. The summer months, like we're in now, can be a trying time for any investor, but 2026 feels like it's brought a little more heat than usual. Here's a short list of items that seem to come in and out of the news each week: ongoing diplomatic efforts in the Middle East, 2026 midterm elections, AI and IPOs, and a Federal Reserve that's managing inflation and job growth. So every week there's another piece of news that can make you think, why don't I just sit this one out? In fact, there's an old song titled, Wake Me Up When September Ends. There ain't no cure for the summertime blues. The fear and greed index is again sitting at the fear, and fear level is fairly high. And as a comparison, 1 year ago, the greed index, it was at 63. 1 month ago, 29 was the fear indicator. 1 week ago, fear was even higher still, and then the previous close is right around there. Everybody's kind of like climbing the wall of worry. Charlie Munger, who's perhaps best known as the business partner of Warren Buffett, once said, "The big money is not in buying and selling, but in the waiting." So if you find yourself getting anxious about your strategy, remember what Charlie taught us. Waiting can be the best way to manage your portfolio in a world filled with uncertainty. Or if you have questions, you can reach out to Northbound Wealth Management. Stay tuned for the next segment. Put this out on the blog before they board the plane, a financial guide for study abroad families. Studying abroad is one of the most formative investments a family can make. The financial side, however, often gets less attention than it deserves. In the most recent academic year, 298,180 U.S. students studied abroad for academic credit, a 6% increase from the prior year. They spent their semesters across more than 170 destinations worldwide. While those students may share many of the same types of enriching experiences, what varies is how prepared their families were financially to give them the opportunity. Most families start with the headline program fee and assume it tells the full story. A semester abroad through a third-party provider typically runs $15,000 to $22,000, which usually covers tuition and housing. The all-in average expenses can be higher once out-of-pocket costs like welfare, visas, and daily meals are factored in. Direct enrollment at foreign university varies by country. Germany's heavily subsidized public universities cost a fraction of a semester in London, while Japan, Australia, and most of Western Europe sit at a higher range. Research shows that families encounter unexpected financial blind spots. Expenses include airfare, airport transportation, bedding, groceries, a local transit card, and basic setup costs. And these early extra costs all land at once. Overseas programs encourage students to build a budget from the official cost and then add a cushion as a contingency. Having that structure in place before departure rather than after the first credit card statement arrives can make the difference. So the estimated total semester cost by destination region, and I have this out on the website, you can check it out. Latin America, $17,950. Asia Pacific, $19,850. Middle East, North Africa, $19,850. Africa itself, $20,850, and Europe, $20,950. So using 529 funds, the rules that can trip families up, got to keep this in mind if you're going to use those funds. For families who have saved in a 529, the first question is usually whether those funds can be used for study abroad. The answer can be yes, but eligibility has real teeth. If a student goes abroad through their U.S. home institution study abroad program, the home school's eligibility can extend to that semester, provided the credits count towards the student's degree. If you have questions about eligibility, check with your school and consider speaking with your tax, legal, or accounting professional. What 529 funds cannot cover is equally important to know. Airfare, passport fees, and visa costs may not be considered qualified expenses regardless of how essential they are to getting there. Also, a 529 distribution must occur in the same calendar year as the qualifying expense. For example, the timing of a December withdrawal applied to January paid spring semester expenses can trigger unexpected fees. One action item to consider is verifying the specific institution or program against the Department of Education's federal school code list before making any distribution and coordinating withdrawal timing with the actual payment schedule. Currency, cards, and moving money abroad. Standard international bank wire transfers carry outgoing fees, plus an exchange rate markup can be hidden up front. You may want to look into services that apply the mid-market rate and show all fees transparently, which might save some money over a full semester. Currency fluctuation adds another variable. A material shift can change how far a fixed monthly budget goes. Getting the appropriate card set up can be worth the time, especially if the student plans to rely on the card for most transactions. For family communication, popular apps and Wi-Fi calling tools that your children are probably already familiar with work in most countries and often cost nothing beyond a data connection. I put out a chart of the USD to Euro and USD to the British Pound exchange rates for January 2024 to June of 2026. The chart illustrates how a fixed dollar budget is affected by real world currency movement across a semester. So if you want to check that out, you can go out to the blog. stlouisfed.org is where I grabbed that information from. Will your health insurance actually cover your child abroad? It's always a question. Health insurance is one of the highest stakes items in study abroad preparation, and it can get less attention than it deserves. Some U.S. health plans provide limited overseas coverage. Those that do not offer international benefits on occasion require students to pay for care at the point of service, document everything, and file for reimbursement afterward, subject to benefit limits. The financial exposure from a single medical event can be unexpected. Medical evacuation by air ambulance back to the U.S. can cost $20,000 to $200,000, depending on location and condition. And most domestic health plans provide no evacuation benefit at all. Other options include the host university's international student health plan, the standalone policy from an international student insurer, or for years-long stays, a short-term expat health plan. Whatever the choice, check to see if evacuation and repatriation coverage is included and have the policy number in the 24-hour emergency line accessible before the student departs. So you can check out what the costs are in Europe, Asia Pacific, and South America out on the blog. The source is jetsetprotection.com. Tax obligations most families don't know about with this stuff. 2 tax-related considerations should be addressed when studying abroad. The first is foreign bank account reporting. If a student opens a local bank account abroad and the aggregate value of all foreign financial accounts exceeds $10,000 at any point during the calendar year, a foreign bank account report, or FBAR, may need to be filed with the Financial Crimes Enforcement Network. Check with your tax legal accounting professionals to see if this applies. The second is gift tax tracking. The annual gift tax exclusion is $19,000 per recipient for 2025 and 2026. A couple electing gift splitting can transfer up to $38,000 to a child in a calendar year. Some families sending a monthly living allowance will not approach this threshold, but consider keeping a running total against the exclusion so you have it at tax time. Why students tend to overspend abroad. One of the most consistent findings in behavioral finance is that the psychological distance changes how we process financial consequences. Trope and Lieberman's construal level theory established that the farther something is from your immediate experience, whether physically, socially, or emotionally, the more abstractly we think about it and the less vividly we feel the stakes of that. Money spent in an unfamiliar currency far from home in a context that feels exceptional simply registers differently than money spent locally. That shift affects behavior in predictable ways. Digital payments can reduce the friction of spending, and an unfamiliar currency makes that effect even harder to notice. Add in the limited visibility parents have into daily spending and a tendency to rationalize overspending because the experience feels too important to constrain. And pre-departure budgets regularly get stretched. One approach to help manage this is to set up a clear monthly budget, regular financial check-ins, and a dedicated account that gives everyone access to the account. Budgeting is even more important when you factor in a tendency of students studying abroad in one country to take weekend trips to other destinations while they're there. For students spending a semester in London or Dublin, the temptation is strong to hop over to Paris, Rome, or Prague for a few days. Croatia, Morocco have also become popular destinations for U.S. college students looking for weekend excursions. While there are discount European airlines that offer cheap flights, the costs of these side trips can add up. Consider factoring a few of these into the overall budget, and you may not be surprised later or so surprised. You may also consider making an agreement with the student that they'll pay for some or all of these quote unquote extra activities. So before they leave, here's a checklist. These items are worth working through. Some take minutes, a few need a little more lead time. Getting ahead of all of them is worth the effort. So, number one, confirm 529 eligibility before any distribution. Verify the specific program or institution against the Department of Education's federal school code list, and confirm that withdrawal timing aligns with the calendar year of qualifying expenses. Number two, check to see if you can get a no foreign transactions fee credit card in the student's name. Having the card in the student's name can help them build credit history and may help manage complications with a parent's card. Number three, establish a money transfer approach for regular living allowances. Try to locate a service that shows fees up front, all fees up front. A few minutes of comparison before the first transfer saves money across the whole semester. Number four, consider building a full cost budget. Include program fees, housing, food, local transport, airfare, visa costs, first month setup expenses, and a realistic travel and social allowance. Better yet, ask for your students' help. Involve them. Number five, review health insurance coverage. Contact the current issuer to understand what is covered internationally. Compare what the host university offers with standalone international student options, and confirm that evacuation and coverage and repatriation coverage is included. Number six, decide on the cell phone plan. That's a big one. For a full semester, a plan purchased in the host country may offer better value than a U.S. carrier international day passes. With preparation before departure, families can focus on supporting the experience rather than managing surprises from thousands of miles away. Let us know if you need any additional information. We can point you in the right direction. I've got an FAQ out there on the blog that's got a lot of good stuff in it as well. So go check that out at www.northboundwealth.com/blog.
Whether you're just getting started as an investor or you're managing a multi-million-dollar portfolio, Northbound Wealth Management has the solution for you. It all starts with building the right financial plan. To speak with a financial planner today, visit northboundwealth.com. Don't forget to check us out on youtube.com at Northbound Wealth. And make sure to leave a rating and review on your favorite podcasting app. Thank you for listening.